All right, what is up, Grunts? Hope y'all had a great weekend. Okay, we're just gonna start right away with our week ahead prep. What was important to me over the weekend was just the China and Taiwan escalations is starting to pick up. And they being pretty ballsy because it was like that they was watching how Russia was taking over Ukraine. So before they even like do anything, they're already setting threats. You know what I'm saying? Like the relationship with the United States is at a crucial point. Pretty much, we will fight to the end if anyone tries, tries to defend Taiwan. It's like, yeah, this is the start of these threats. So this is just showing us that something is bound to happen. Like probably pretty soon. Um, but depending on like how we could invest in it, like forex wise, we're already in a risk off market, right? So I'm not expecting this to give more risk off flows, but the way I would take advantage of this is we look at Taiwan's import and exports and see like what other countries can suffer, like what like products, stuff like that could get harmed with China invading Taiwan, and that's how you take advantage. I believe it's manufacturing and computers and stuff like that. So like we just do that research on Taiwan, and then we could look at like how what like outports could get impacted, and that's how we could look to invest in it. But in the forex market, it just will be like a risk off flow. Nothing that I think is gonna like drastically impact the markets because we're in a risk off market anyway. But yeah, and then we see the Russia Ukraine tensions, they're still escalating, but I'm not using that as a reason to determine the route that we're heading to with the markets. So yeah, just pretty much summarize everything I said. Pretty much risk off market still. Like everything is just negative. You get what I'm saying? Like there's nothing been like positive overall to give us an optimistic market. So we never had that yet. So like monkeypox just coming in. That's a political situation, but we know what route that can go that impact people. So that could impact jobs and labor markets if they choose to go that route. China now they're back into restrictions. Now we have in the U.S. is getting threats with weapons. That's still happening. China and Taiwan tensions is escalating. China and U.S. tensions is escalating, and then we're gonna have our recession problems globally. We're gonna have a lot of supply and demand issues. Especially in the U.S., especially when all these central banks is raising rates, especially how aggressive they're doing it just to fight inflation. It's going to lead more into a recession state that it's going to really impact a lot of people. And yeah, this is our week ahead. This is the main focus so far that I'm still paying attention to. And inflation pretty much inflation is the main issue. This is the main issue. This is the issue for all central banks. This is what inflation is, the reason why central banks is reacting the way that the way it's acting. And I'm gonna go more into it later on. But economic events for the week. AUD on Monday is gonna have a holiday. And then on Monday, also like a London session around 2, I believe is at 2 a.m. A little hour before London Open, we're gonna have our UK GDP data. I'm gonna double check though the time just to make sure. But then US PPI data, we expecting slow growth overall. So I'm expecting that data to decline. I'm expecting bad data from that, just so that yeah, just because we're expecting slow growth. I'm not expecting any growth data to just show very high numbers. If that do, then that's gonna, the Feds will go a different route. Then the most important things we're gonna have for the week, 2 p.m. All right, thank you. Yeah, so the most important headline economic data for the week, we're gonna have the Fed's rate decision and then the UK rate decision. I didn't put the yen rate decision there, but most likely I'm expecting them to remain the same. Like they're still stimulating the economy. I'm not expecting them to raise rates. You know what I'm saying? So I didn't put it there because there's nothing surprising about what they're gonna do. I would have put also we're gonna have I believe we're gonna have the Swiss franc. Hold on, yeah. Then we got Jerome Powell coming in later. Let me check too. Swiss franc. I didn't put it there because I know a lot of us don't trade that, but it's also something we could like pay attention to just to gain the experience. Just see when they're here. Yeah, so the Thursday, this is going to be London session, the Swiss franc. So that's a CHF. That's a safe haven currency. They're having their rate decision too. But I saw a few markets was talking about that. They probably gonna see this be a little more optimistic with their rates. They're still gonna be in negative territory, but maybe the headlines is gonna be optimistic. But I know a lot of us don't trade it. But if you start seeing the Swiss franc start gaining some strength, that's gonna be why. It's really gonna be based upon their press conference, like the stuff that they're gonna say. Yeah, so all right, that's it for the data. Now let's go to the charts. All right, so let me pick Vanye. Do you know why equities dropped last week?
It was from that data we got around the CPS, I believe. I'm
Yes,
not. Uh,
but
it
why?
was came out negative, but I'm not 100% sure why.
It's okay. Yeah, so the CPI print for the U.S. data for the year, it came out extremely high at an 8.6. So inflation is high. That's why it's good for us to we pay attention to everything, the major focus of the markets. So high inflation is the major focus. Y'all remember the CPI print before last week that it declined. So everybody thought that it was a peak of inflation. So when people thought it was a peak of inflation, we saw equities go bullish. We saw the dollar go negative because if that was a peak of inflation, then the markets, investors are expecting the feds to be less aggressive. So that's why, that's what happened the first time. So when inflation data came out last week, it really shocked everybody because it overshot the high price of what the markets expected. So that's why we have this extreme volatility drop in equity markets because now the markets is anticipating for the rate decision for the feds to be more aggressive with their rate hikes. Y'all understand? So like that's the reason for equities to drop because now it gives us the markets. This is like getting into the rumor before the rate decision because if inflation is we've been raising rates already, right? So another concern about raising rates was growth. So if we having growth problems, that like the God thing to do is to say, okay, they're not going to want to hurt people by raising rates so aggressively. So if inflation shows a sign of improving, then the Feds is probably going to not raise rates as aggressively, so the people don't have to struggle in their everyday life with buying goods. But the Federal Reserve, just to be blunt, they don't care about us. They only care about statistics. They only care about inflation, bringing inflation down. So when inflation showed that the number was drastically increased, so it shows that they don't have control of it yet. So now the markets is anticipating for this next rate decision for them to do a 75 basis point hike. So when they expected that, that's that's the one of the main reasons why equities drop so impulsively. And heading into today, we can see that it's still dropping. But look at the dollar. Sorry. But looking at the dollar, we see how impulsive the dollar has been too. So that's also another sign of when you're raising rates aggressively, it just shows that it just gives investors, it's more appealing for investors to invest in that currency. But the other reason is too, is that we really haven't had major negative data from the US side to make investors not want to get into the US dollar. And then also it's a safe haven. So all the, crazy shit that's going on in the world also, explodes the dollar as well. And another sign too is when we look at gold, we see how gold came bullish from the lows too, you know, and that like the reason why I'm looking at gold being bullish is a growth concern, because you see the dollar is bullish and then gold is bullish too, and then we look at the yields is bullish. So then you ask yourself, okay, why is gold bullish? So my opinion for that is just because gold has turned bullish is simply because it's a growth hedge. And I'm expecting gold to probably, investors is getting into gold because of the concerns of global growth. All right. So it really depends on like how gold is going to react at these highs too. Because usually like if we have yields that are bullish and then we have the dollar that's bullish, that's usually negative for gold, you know, but we have both of them bullish, and we also seeing gold being extremely bullish as well. So I just want to see like how gold is going to start reacting, you know, pretty much at this high area. I'm not at the 8 hour. Just go at the 4 hour time frame. Because you can just see this range overall on gold, right? You know, like this is something that you're just going to want to be pay attention to and be careful of. But what I just want to see, I want to really see if this is really going to be a concern. So I just want to see if we could get some sort of bounce from 1856 and get some continuations, or just see price stay above these highs pretty much of 18 I would say 1870 at, you know, just a really good area to pay attention to. If we could just stay above this area and get some continuations, only if we have more concerns of growth, then gold is just going to be a hedge for that. But like overall the fundamental, like we know that like in a normal market condition, like if yields was extremely bullish, dollar is bullish, gold is going to drop. But you know, like if we don't pay attention to other aspects of the markets, and that we're just trying to sell gold for no reason, like this is what's going to really hurt you. So that's why I've been extremely patient when it comes to gold, you know, just because I just want to be like more sure. So more like negative data globally that shows more growth concerns, I'm gonna start getting into gold buys. Like me personally, I'm gonna look into more gold buys, and I'm only looking at it as a growth hedge. But if the yields continue bullish, that could really make gold go in this like range that we've been having so far. We get in nice buys and then we get in sells. So like price action is probably gonna just do shit like this whole entire time, just because, you know, like the secondary quote is the US dollar. I hope I didn't lose nobody. All good? Y'all can speak. It's all right.
Yeah, buddy, I'm following you.
Good, good.
You lost me, but I'm gonna watch the rewind, and I'm gonna, take notes and stuff. I'm at the gym, I fucked up coming here.
Oh yes, I know it's hard to pay attention and stuff like that. No, no, no problem, bro. When we finish, I go over it again so you can understand, because this is important. You know, like you don't want to get into the markets just trading randomly. Like you want to get into the markets at the right time.
Yeah, definitely. That's what I've been feeling throughout my whole, trading. But last week I started trading real money, so let's see how it goes.
Yeah, like this is gonna set up some real good opportunities. So I know a lot of y'all like US 30, NASDAQ in between. All right, so you can start with the NASDAQ. You know, like we've been getting bad earning data from a lot of tech companies. You know, the NASDAQ, we're getting bad earning data. That's, you know, that's one negative impact we're gonna get when it comes to equities. What else we're having? We're having growth concerns, right? So a lot of jobs. I'm expecting more stock companies to have bad earnings. You know, like we just have to pay attention if the labor market is going to be a huge issue when it comes to growth. But we've been bearish for since probably the beginning of the year, since they started raising rates and they stopped quantitative easing. That's what really, you know, that's the main purpose of equities dropping, is the stopping of quantitative easing, and everything else just added fuel to the fire. All right. So yeah, looking at equities right now, like we had this very impulsive move. I don't want to sell from the lows, but we have every reason right now to sell in equities, right? But you know, pullbacks happen just because it's the equities. You know, equities is not going to just fall forever. We're going to have impulses, then we're going to have corrections. So we're just going to want to wait for those pullback corrections to happen from these lows. You know, see if we can form a support here, and then we're gonna want to see some pullbacks from these lows. Like, and it don't really have to be a reason for it, but if we get a like some sort of good headline, just to force equities to be bullish for that moment, you could take advantage of that. But I would look for any pullbacks from the lows just to get continuation sells heading, heading for the rest of the week. And then if we could like, cause just because it's today, and I think the market, like the markets is just reacting because of last week. But if it can happen, like the markets is just gonna move the way it want to move. But we do like to sell below breaks of support. But if you want to go to the lower time frames and you want it to go below the previous wicks, you want to see price go below the previous wicks to prove that price is going to continue to break down lower. And then you want to get some sort of a retest or some sort of an order block to get those continuation sells. That's something I would wait for. But personally, I'm patient when it comes to the markets. So I'm going to try to wait until like we could get some sort of price action like this.
And order block is simply like a range.
Yeah, like a range, an order block, or a retest. Like a triple top, like we get like a triple top, double top, anything like something like this. We could get something like this, something like this. Like history, it all repeats itself, right? It's just getting into the markets at the right time. Like a lot of the problem is like, people is trying to sell when when the markets is going bullish, and then look at these candles. It's not giving you enough data to tell you to sell. But
Check the 1 minute right now. What do you think right now?
The 1 minute. Yeah, I would just zoom to the left, because we still have traffic all the way over here. That's why it's like if you try to sell now, like like I said, the markets could do what it wants to do now. Like it's all about your trial and error. Like I went through a lot of trial and error trying to sell at the lows, and it's the equity markets. So if you don't have a decent stop loss, like you're gonna be taking losses for no reason. Like an example, you're trying to sell like below here, and you take a sell limit right there at the break of this low, and you're going to be losing just by this bullish candle. And that's pretty much what a lot of people be doing when it comes to equities. Like I'm gonna just zoom in just so y'all can see. Y'all look at y'all technicals, y'all sell at this break, and then y'all gonna be losing at this wick. And then to y'all, this is a lot of pips, but when you zoom out, you realize you're still caught in a range, and that's the problem. Like you're not gonna really give your stop loss breathing room at this point. So that's why I say it's better to wait for more candle data and stuff like that, just so you could get like a clear information, like that's why I like stuff like this. We get a range consolidation, whatever you want to call it, pullbacks to fib levels. Like you could do whatever you want. You just have to understand the direction of the market. That's really the main purpose, is understanding what direction the market is moving to, and whatever your entry strategy is, it don't matter. Just be in the right direction. Because if you're in the right direction, the only way you could lose is if you're over leveraging or your stop loss is just too tight. But other than that, you want to be in the right direction of the market.
Yeah, that's what was happening to me on Friday, man. Like I kept getting stopped out because of my stop loss was too tight, and then it was going right back down. I was like, what the fuck? It happened like 3 times.
Yeah, you could be right in the direction, but you could just be you like I said, like the stop loss be too tight. You get a little
Too tight.
you lose a lot of money, and equities is what's going to spike those emotions. Because it gives a lot of pips in these moves. Like shit. Imagine, bro. Like you could just place your like you could place your stops here, and then I mean you could sell here, and then you can have your stops all the way above here. Like imagine that shit. Like because equities is gonna sell off regardless, but it's just these pullbacks is what's gonna kill you. But imagine you can have your stops above here. Like you're gonna win. I bet you're gonna probably win 6 times out of 10 if you do that.
Straight up, man. I should have done that.
Yeah, it's okay. Like it's gonna be a like that's what we're here for too. You know, like but it's good that you're trying to make those trades on your own too. So that's what's important. You know, because you're gonna learn from your mistakes, and then that's what helps you get better. So yeah, definitely don't worry about that.
Yeah, definitely, man. Always trying to get better, no matter what it is.
Yeah. All right. So let me just yeah, 1 sec. Where's this at? Okay. All right, so I'm gonna go through this right here. Like, so this is pretty much self-explanatory. You know, looking at the Fed rate decision, in the expectations, there's already a 50 basis point hike. You know, we already know that we have extremely high inflation that's uncontrollable. So expectations, you know, they told the markets what they're gonna be in the same. They're gonna have the same risk tone. They're gonna have the same language. But from the CPI data from last week, I don't believe like it could happen, but it's 100% chance that they're gonna raise it by 50% basis points. If they do raise it by 50% basis points, I expect a dovish outcome. Why? Because these moves of the markets that happen with you know the equity markets and what happened with the dollar, it was it was all based because they expect the Feds to be more aggressive. You know that's why the equity markets did what it did. You know that's why the dollar went extremely bullish. So that's something that you're going to want to pay attention to heading to that rate decision. So if they leave the rates at 50 basis points, that's already expected. So why would the dollar just go extremely bullish for no reason? And it's already expected. You know what I'm saying? So that would be my dovish outlook. That's something I would look for as a negative if I see that they do a 50 basis point, and also they're not talking about more aggressive rates for the future, for the next hike and stuff like that. That's also a negative. You know, if they start talking about concerns and any problems with the economy, that's one thing that I picked up with a lot of the central banks that had um, the recent rate decisions that they're not talking about the problems that's going through with the economy. So when they don't talk about the problems, that turns more into a optimistic outlook. Okay, so hawkish outlooks, I would look for a 75 basis points or higher. That's gonna be the surprise of the market because you remember, like I said, the expectations is 50. So if they do a 75, anything higher, I expect anything higher than a 50. If they do anything higher than a 50, I expect the dollar to continue to be bullish. You know, more signals of them having to be more aggressive in the future, and they're not talking about no concerns of like growth problems, and they're just talking about inflation needs to come down. We're going to do everything to try to bring inflation down. That everything is raising rates aggressively, you know, and we don't need them to tell us that, but because we all from, I believe, majority of us is from the United States. So when they're being aggressive like that, you know, so I expect growth concerns to really start impacting us, you know, so that's why like during this whole situation, like save your money. You know, like I care about y'all, so like they don't care. So save your money, like be smart with your bread. Like be smart. Like don't overspend because this is what's gonna start impacting our everyday life. Just to let you like you don't want to wait for the last minute to say, God damn, like this shit is crazy. Like this is like raising rates like this, that's what's gonna cause jobs to start doing layoffs. And when the layoffs start to happen, that's when the recession is really going to be a problem. That's when inflation really going to start kicking people in the ass. You know, like the reason why, like, yeah, the housing market is going to crash exactly because people ain't making money now. You know, like that. This is what causes the bullshit. You know, and people just not preparing for it. That's the issue. And they
Yo,
had,
can I ask you a question?
yeah, go ahead.
My fault for interrupting you, by the way. Good night, everybody. Oh,
No,
yo, so this 75 basis points right now, we knew they were supposed to raise it. Uh, a couple of months back, they mentioned it was going to go up by 25. Where did this 75 come from? Is it because of everything that's been going on and the inflation? They
yeah,
see that the 25 wasn't controlling it, so they decided to like
yeah,
quadruple it? No.
They were supposed to do 75 last decision, the last meeting. There was a few members that wanted it, but they didn't do it because inflation. Because they was expecting inflation to be at a peak, and also like yeah, like 75 is pretty aggressive. Like that's almost a whole point, you know. And
Absolutely.
yeah, so like that's the only reason they didn't want to do it last time, because inflation was showing, they was already getting some hints that inflation was possibly at a peak, which they never showed proof of, you know, but that was the reason why, like they just doing 0.25s and 0.50s. But yeah, like yeah, it's like here it shows the probability is 100%, you know, for 50% change, you know, and this is the current rate. And this is like actually the growth like through the years, like how where they expect the rates to be at 3.5. And remember, 2% is what all central bank, that's the middle. They want, that's where it's like more controllable. Inflation is at 2%. So if you start seeing shit is like 5, 8, like that shit is crazy. You know what I'm saying? Because 2% is the mid. And like, because now we're gonna look at the Bank of England rate decision. They've been pretty like, they've been very, very, very dovish. You know, so their expectations is to raise it by 25 basis points. But y'all remember like when Bailey was he was talking, and then you remember his comments where he acted like he didn't know what the fuck to do. Like he was like, oh, inflation, I don't know how we're gonna deal with this shit. You know, like that's concerning. Like he's the leader of the Bank of England. So sorry. I'm pretty much, I'm expecting more of a dovish outcome when it comes to that, because of really I want to see what they're gonna do when it comes to quantitative easing. So if they start to push back on a tightening, then that's going to cause, you know, the currency to devalue itself. But like a lot of these banks, you know, they stop the printing of money, you know, just to put it in those terms. And when they stop the printing of money, that increased the value of the currency. So now they're probably going to pull back on that because of the economic concerns, the growth concerns, because inflation is extremely high. I believe their economy, their growth, they're going to have job concerns. So they're going to be like more pushing back and more cautious than the Federal Reserve is going to be. So I really want to pay attention to if they raise the rates, because this happened 3-4 times already. If they raise the rates, I'm not expecting the currency to go extremely bullish because of that. I want to see what, you know, like I want to see like what he says. You know, I want to see the comments from it first, and then I'm gonna make a decision. You know, I'm not gonna try to guess when it comes to this. Like we could already assume what's gonna happen with the dollar. You know, like we already see it. You know, they're already pricing it in now. You know, so that's why it's like you can't look to enter now. Wait till pullbacks. Wait for better entry confirms. All right. But when it comes to the Bank of England, it's going to be 50-50. Like we know that they're going to raise the rates, but are they going to finally start talk about concerns and their issues with the economy? And that could bring the value of the currency down bearish. So that's why, like when the Bank of England talk, I'm gonna wait until the comments. The Federal Reserve is going to be based upon the rate decision that they do, you know, because that's going to be a surprise. But the Feds, like the Bank of England, they're going to have to do an aggressive rate hike for me to want to get into the pound. Like I want to see like a 75, 50, something surprising. But if they raise it by 0.25, like that's already expected. But their tone is just so dovish for the currency overall that I'm not going to look to buy it. You get what I'm saying? So yeah, like we're gonna get more into it when that come out as well. And then you could look here, you know, like like all rates, they're gonna raise rates. You know, like, and this is pretty much the trend that is gonna go with the rate hikes. That's how aggressive they're gonna be, and this could change after every time. But yeah, like you have any questions? Like yeah, don't hesitate to ask. Like if I lost y'all somewhere. Like hopefully y'all, y'all learn some shit.
All good, all understanding here, bro. I'm very good on the knowledge, man. Thank you again.
Yeah, like look at China. Like China is an uptrend. Everything else is bearish. Like that's all from the stimulus of the economy. So like that, like this automatically shows. The stimulus of the economy. That's what shows it. So that what helps you know what direction to get into the markets. And I'm pretty sure if we look at the Nikkei, that's the JPY currency, that shit is bullish too. So like that's why like the fundamentals is important, just to understand the overall direction of the markets. All right, so yeah, we're gonna have UK GDP coming up at 2 p.m. I just want to get a look at this too, because I know a few of y'all is going to trade that.
Are you holding any trades or?
I'm still in USD JPY, and yeah, that's pretty much it. USD JPY. Yeah, I go over where I fucked up at.
Session, are you?
I didn't hear you, Isa.
You ain't doing a London session, are you?
Nah, but I'm gonna try. I'll try. If I'll be up, I'll try, because this is probably gonna be something good. Like I'm gonna show y'all where I fucked up at yeah, on Friday. Like I was in a buy on AUD, because overall, like, there's no reason for AUD to be fucking bearish. Like when it comes to their policies, like their the RBA, like everything is optimistic as hell. The only negative that we had was the China, going back into lockdowns, which made me get into the sales in the first place. Alex, you was there, like that. We called themselves probably up here somewhere. I don't know. We was like we had the whole drop, and remember I was telling you, like, don't fucking let go of that shit. There's no reason to.
Yeah,
Yeah,
it was.
We just had to wait until NY session for the continuations, but I broke my rule. Like I was looking for buys, right? Like this is where I got caught. But this is why, like, I would have told y'all to, like, all right, wait until we get a break of structure first. Like, wait until that point. But my emotions when it came to this trade was that, fuck, I want to get in early, and that's what fucked me up right away. Like, instead of me waiting for my rules, because this high already printed, and it matched up with this high. So usually when I see this, I usually wait until we get a break above this resistance, and then that the markets are showing me that it wants to continue bullish. But instead, I wanted to get in early because I expected AUD to gain some strength, like, but I didn't have no reason to think that AUD was going to give me strength for that current moment, so that's what happened to me. And I looked at this consolidation area, and then I marked out that we held this support. So I'm like, okay, as long as this support holds, I can continue bullish. I could have took buys from the highs, but we're human. We ain't looking for that shit. Like, I didn't expect that to happen. But that I got hit with this whole move, and then I got stopped out. But if I would have waited for my rules to wait until price break above structure, and then also having the fundamental reasons to follow, like the risk tones of the markets to follow that, and then overall it was a risk off market, right? So like it happens to me too. But the fact that I give this all that I got, that I know why I fucked up. So that was why I fucked up. Like usually in a good day, like, like we catch this shit on GJ all the time. And then usually GJ just continue bullish like what it does. But I jumped the gun, and that's why like, yeah, like yeah, I got hit with that shit. And I was like, damn, because I'm like, there's no reason for AD to be bearish. But we're gonna catch the buys. When the time comes, we'll catch these buys. Yeah, heading towards GJ, like looking at the higher time frames, you can see like the literally the price that we're rejecting. We're rejecting the highs. This is exactly why you don't want to buy from the highs. You don't want to try to intraday trade, swing trade at all-time highs. You don't want to do it. You want to scalp at those reasons. But if we could find reasons to sell it, then those are the reasons to take advantage of. And then usually like at these sell plays, like you just look at structure. Like look at the breaks of structure, like the impulse, we break below support, we get the retest, we get the continuations. You see the break below, you see the retests that we get. That's why I like to wait for, like breaks and retests, order blocks, consolidations, and stuff like that. And then we had a strong yen, so it was really no reason to look to buy pound. But I'm expecting, like I want to see if price, like where price go. Like I say this all the time. Like we just have just this bearish momentum. I want to wait for more data to come. I want to wait for more candles to form. Are we going to hold this support, or are we going to continue until this, this support, this demand zone right over here, and then we can make a decision. Either we're going to continue bullish, or we're going to start breaking below. All right, so I'm gonna just be a little more patient when it comes to the pound, just because you can see like in the 30-minute, we're just ranging here. It's not really giving us an opportunity, but in order for me to want to get into buys, I need to see a break of structure first. So I want to see price come back and break above these highs, and then I can look to continue to trade. Because I'm not going to consider this a break of structure yet, because we just making higher highs and higher lows this whole entire time.
What if it breaks with the news?
Then that would be different. Like if we get like if we get like some news headline that's optimistic, especially for the pound, like anything like that, then I would look to take it, and I'll take that direction right away. Like I would take it then, and it really depends on, because I like to wait for the technicals to give me something as well. Like if we, examples, because like if we get like some good news that come out, and then we start breaking above this structure point over here, we break above these highs, then I'm taking the buys at the retest and the continuations. So I still want to wait for structure. You know what I'm saying? Even if news come out, I still want price action to show me that it's moving in that direction, because we could get good news and then price action don't do shit. It don't follow, because that happens sometimes too. So that's why, like, even with the good news, you still want to wait for some structure points to break. Like, and everything else is really stretched, like really stretched. Like I wouldn't want to get into I really wouldn't get into USD pairs until we get some pullbacks, like USD JPY for an example. I don't want to see a massive correction of the moves, but like this. So this was the impulse. So I want to see, like, if we could retest these highs, that would be a good sign, and then I'll probably look for some sort of support to form and get some continuations, but if we get anything negative against the dollar, look to sell that shit, because this whole entire move is going to get corrected, so like we could take advantage of those opportunities, when it comes time for the Fed decisions. Like that's where the opportunity presents itself too. So if we see that anything dovish come from the Federal Reserve, look to sell the dollar, because the markets is just doing this based upon a rumor. So once the rumor is no longer valid, it's going to recover the whole entire move. But I'll leave it here. I know I probably said so much shit, and I don't want to lose y'all. But this week is going to be really important. It's going to help a lot. Like, especially to the future, it's going to make the markets. It's going to make the markets get a little easier to digest. So, y'all have any questions? Like, Valle, I know you said you have, like, just go ahead, bro. Like, if you where I lost you at, like, where you wanna, anything you wanna ask, just ask. Don't be afraid. Yeah, thanks, Alex. Yeah, so if y'all all, y'all good, like that'd be great. Like I'm still looking.
I'm good, man. I'm good, man. Thank you.
Yeah, like yo,
Yeah, I
let's keep.
appreciate it. I gotta do some more research and shit, man. Just to
Yeah,
understand the lingo.
yeah, just like message me. Like tell me like what is it that you don't understand. Like the stuff that.
It's funny because I don't even get say the US dollar is like I don't know like how the news. I still don't know how to read which pair. Like if the Japanese yen says that they're having bad data, I don't know how to put that in my pair and sell it or buy it. You know what I mean? That's so it's fucking sad.
No, it's okay. So just understanding if like if news is good or bad.
Yeah, I was
Um,
gonna research that when I get home.
like um, I'll say it like Bloomberg. Like watch Bloomberg TV. Because like they go to college for this shit. You know, like they get master's degrees for the shit, and that's all they fucking talk about is the economy and how it affects it. And like you could read articles. Like I'm gonna send a bunch of links of articles in the trading terminal and the trading lounge, so y'all all could go through it, read through it, like read through it, because these are professionals that like they go to universities for this shit. Like this is their job as like economists and stuff like that. Like we're doing the same shit too, you know. But it would make it just to read like how like certain things could affect a certain pair. Um like economic data is common sense. Like if we get good PMI, you expect that currency to go up. If we get bad PMI data, you expect the currency to go down. So the way I look at headlines is like we do the risk on risk off flows. It's the same way. Like if we get something like Russian tensions, like anything geopolitical that's negative, we expect, you know, a risk off market. But like down to like an individual currency, say like what example, like it's usually like economic data that could really impact it. Like if a federal like a Federal Reserve member comes and he just talks negative, he's like, oh, like sorry, job data is very bad. I'm not really comfortable with job data. I'm concerned. Like stuff like that is negative for that currency. You know, like what just helped me was yeah, like reading through a lot of articles from like banks, like because the banks they do this shit too. They have they have like market insight. It's called market insight. You can go to Google like banks market insight, and they'll give you like their insight in the whole forex market, like and shit like that. And then you can read. They'll tell you like what's good and then what's bad, and like what to expect if things happen in a good way, or what to expect when it happens in a bad way. You know, but I'm gonna send those links and just, you know, just read through them. It's boring, like yeah, it's boring, but it's gonna help you in the long run, you know. But yeah, like don't hesitate, because because you say that and it's like 50 other fucking people that's the same way, but they just don't want to say it, you know. Like so, don't feel bad. We all been there. Like I've been there, but I still think I'm dumb as fuck, you know. So it's all right, bro. Like yeah, like we all there. Like you're always gonna be a student. Don't think that you're gonna reach a peak when it comes to this shit. Like you're always gonna learn new shit. Like there's still more shit to learn when it comes to this. Like I didn't even dig deeper. Like sorry, I didn't go to yields yet. I didn't like we're not going over the bond yields yet. We're not going over the Fed futures. Like this shit gets deeper. Like it's so much shit, you know. But it's like we're just focusing on just like the main, like just the simple shit where it makes trading a lot easier. Like we're not going over the yields. We're not going over inflation. You know, like there's so much shit. It gets a lot deep. You're always gonna be a student. You know, so like you just have to be willing to learn, you know, and it's gonna come, you know, it's gonna come. But what's gonna stop your growth is over leveraging. Like that's what's gonna stop your growth, because if you're over leveraging, like you're not focusing on your trades based upon your rules and your fundamentals and your reasons why. Because if you over leverage, your trade is dead because you over leverage. So you're not even going to win the trade because of everything that happened, Like I wouldn't win this GJ trade because I got stopped out by this wick, not because I was wrong with the dollar being bullish because of the high CPI print. We held that support. You know, like this is pretty. Like this is where I got in on the like. I think it was right here. No, was it there? I'm gonna show y'all though. It was some retest point because it was a break and a retest. Yeah, I think it was over here, but I don't know how this wick is like this because I didn't have that wick in my. Let me just double check. I didn't have that wick in my terminal like that. 134 050. Yeah, it was that break and retest. Yeah, all right. So this was the CPI print. I got in after on a retest. Yeah, so like saying that, like if I was over leveraged, you know, like I would put my stop here. You see, my trade would be invalid because of the stop loss, not because we had the high CPI print and following the fundamentals and following the rules. That's what I'm trying to say. Like, you know, like if my stops was below the lows, because now if this breaks below structure, now that's telling me I was totally wrong. But the fact that you're losing because your stop is tight, like you see like how that's gonna like cripple your learning, you know, because you're losing trades because of stop losses, stop loss placement. You're losing trades because of money. You're losing trades because you're in drawdown, you're negative, you're blowing your account. You're not losing trades because you was totally wrong with your analysis. You know, so that's why I'm a huge fan of like, yo, just like don't over leverage. You know, like place your stop losses where you're gonna have breathing room. You know, so like I don't care what happens in here, but once price break below structure, like break below my structure point, then I'm like, okay, something is up. Like I was wrong with my analysis. I was wrong with the reasons why I was expecting this to happen. But if I lose just because of one one candle took me out, you know, in the next 5 minutes, then you know it's not because like I was wrong with everything else. So that's like that's a lot of that was majority of my problem. You know, like I've been learning for like 5 6 years, but for the past 4 years, I was learning the wrong shit. So like yeah, you know like if you're learning the wrong shit, it's gonna like increase your time to get better. You know, but when you learn the right shit, you could shorten that learning curve. So it's like you know, like that's why like if you want to do this long term, you're gonna have to manage your risk. You're gonna have to. But all right, we've been an hour. It's about 10. My bad, guys. I know I was late. You know, I got family over, but I should be good by the rest of the week. You know, I know Monday I'm extremely busy, so that's why like if I'm up for London, I'm gonna send a link and I'll let y'all know an hour in advance if I do it, so y'all could join. But anybody else got questions? Like, you know, like don't hesitate to ask. We're family here. Yeah, because what I'm gonna start doing, calling you motherfuckers out. All right, guys. Have a good one, y'all.